So first of all, today I actually want to apologize to you because I wanted to make this video faster. I wanted to be earlier, but I couldn't, unfortunately, because I was sick. I got a cold, so I didn't feel like making videos. But recently something happened which I wanted to talk about fast, but I couldn't, sadly, so I'm sorry. I wanted to, but I couldn't. I'm still making this video because I think you're gonna get some value out of it, even if I'm too late. And anyways, I just want to tell you that I talked about this topic on my Italian Discord channel. So I communicated to the members in real time what was happening. Which is that recently China announced some stimulus measures which are going to stimulate the economy and try to get China out of its troubles, because recently its economy is not doing very well. After the real estate crash, the real estate bubble, the economy is not doing very well and consumers are not feeling safe. They are not chill, they are worried, they are not spending as much as they used to be because they want to be protected, they want to feel protected if something bad is going to happen. But right now, the supreme leader, Xi Jinping, announced some special measures and he took out the money printer. He's ready to print. This is creating an amazing opportunities on luxury stocks. Unfortunately, they already rose around 20%. But still, they could be very interesting and we can't exclude they are going to fall in the next few months. I hope so. I hope they're going to get back down because I didn't buy any of them, but they are very interesting. I'm watching Kering and Swatch. These two stocks were extremely cheap, probably they still are kind of, but they were at some buying points, probably, before the stimulus announcement. For most luxury stocks like Swatch, Kering, LVMH, China accounts for about 45% of sales. So it's a really important geographic area. And recently sales in China are doing horrible. Both Kering and Swatch announced that they are having some serious troubles in China. But recently in an analyst call, Swatch CEO said that right now consumers in China don't feel like spending, as I said before. But if a stimulus would come, perhaps trust would get back and they would start spending as they were before. And that's actually what's probably happening right now. The same problem exists for Kering. Recently, sales in China plunged, mostly for Gucci, but also for other brands. So the company is suffering a lot, and its revenues got hit very hard, and so had its EBIT margin. So, these stimulus measures could have a very positive impact on their sales. And of course also on the re-leveraging of their EBIT margin. Swatch recently touched a low of 150, and its book value is 230. From 150 the stock bounced back and right now it's at just below 180, but it's still below book value. For sure the company had a lot of problems recently. Results are not good and actually the cash generation of the company is not that impressive, but the company has a lot of cash, they pay a dividend and the book value is way higher than today's prices, so the stock is fairly interesting. I haven't invested in it, but I'm looking at it. I recently analyzed it and I actually decided I want to buy it lower than 150, but right now it's way higher, but we don't know what's going to happen soon. And then we have Kering, which was down around 70% from its highs, and it looks so cheap as well. When it was at around 220, probably it was a buy. I didn't make it in time because I started to analyze it deeply recently, and then the stock just jumped 20%, but probably at 220 it actually was a buy. So Kering market cap was around 26-28 billion euros, which is a very cheap level, because just doing a simple and fast valuation Gucci could be worth, Gucci alone could be worth around 30 billion euros or something like that. And the company owns other super important brands like Saint Laurent, Alexander McQueen, Bottega Veneta, Balenciaga, and now they are buying a stake in Valentino and they are probably going to acquire the whole company in 2028. So the stock was really, really cheap. And it was probably a buy, but right now it's up 20%. So both stocks skyrocketed up, and they are not buys in my opinion right now, but they are surely some stocks to follow. That's why I'm doing this video. You should follow those stocks and perhaps start analyzing them and see if they are going to get back to those levels. Another way to read this situation is that China is actually having some serious troubles, because if they have to stimulate the economy, it means that things are not doing well. So perhaps the stimulus measures are not going to be enough to repower luxury sales. We will have to see that. Probably it's gonna take some months before the impact of the stimulus is going to hit the luxury brand sales. But maybe, as the Swatch CEO said, there could be a very fast reaction and Chinese consumers could start feeling better and starting to spend again as they were 1.5 years ago. In my opinion, right now we can do nothing but wait and see. Let me know what you think about this whole situation, type a comment, and please remember to leave a like and subscribe to my YouTube channel. See you next time. Bye!